Hello dear students, in this video we are going to cover the advantages and disadvantages of management accounting. Myself Professor Vaishali Bharat Golab. Advantages of management accounting. Accounting is most important and mostly used for the large organization where the task of management is complex in nature. First advantage of management accounting is increase in efficiency. See, management accounting contributes significantly towards the increase in efficiency in the organization by creating the budget or by utilizing the different special techniques, that is budgetary control, standard costing and reports that are helpful for evaluating the efficiency or improving the efficiency of the organization. Then effective planning. See, management accounting provide the necessary information for effective decision making. That's why policy formulation and planning of the operation become more effective to the decision data provided by the management accounting. And performance evaluation. Evaluating performance of the employee department will help in is facilitated by the management accounting through variance analysis and control ratios that will help for performance evaluation. Profit maximization. Management accounting is helpful in profit planning to pursue decisions which can optimize the profit. And reliability. The tool used by management accounting usually make the data supply to management accurate and reliable. Then we can effectively use the management accounting. Elimination of wastage. See, standard we are in management accounting we use the standard cost, budgets, cost control techniques, and which contributes towards the elimination of wastage, production of defectives. That's why ultimately we eliminate the wastage of the organization by utilizing the management accounting. Effective communication. The regular and systematic reporting ensure the constant flow of information about the operations to various levels of management. Employee morals. Okay, morals of employee can be created and sustained through attainable standards, practical budgets and incentive schemes. That's why it helps for improving the moral of the employee. Control and coordination. Control on cost and coordination in the efforts of different segments of an organization can be achieved through performance reporting, variance analysis, follow-up actions. The greatest benefit of management accounting is its advisory role in making the management to take the best possible decisions on day-to-day basis on routine matters and vital policy matters also. That's why it effectively control and coordinate the operations of the organization. These are all the advantages of management accounting. Now we are going to cover the disadvantages. Like any other disciplines, management accounting has its own limitations. Though it is considered an important tool for managerial decision making, its recent origin and several external factors limits its effectiveness that we are going to cover. That is, first and most important disadvantage is dependence for basic records. Okay, management accounting rarely maintain basic and primary records of the operations, expenses and revenue. It derives all its primary data from financial accounting and cost accounting and other relevant records. So, the accuracy and reliability of the conclusions derived by the management accounting is limited to the reliability of its source of data. Okay, so it suffers from the several of the limitations of finance account and cost account because it depends on the basic records. Personal bias. Analysis and interpretation of financial information depends on the capability of the analyst and interpreters. That's why personal judgments and usage of discretion have become necessary in several areas of management accounting. And personal prejudices and bias of individuals can affect the objectivity and effectiveness of the conclusions and recommendations. That's why a disadvantage of management accounting is a personal bias. Management accounting is only a tool. The management accounting cannot be considered as an alternative or substitute to the management. Management accounting act as an advisor and facilitators for decision making by management. The actual deviation, their implementation and follow-up actions are the prerogative of the management. Management accounting provides only data. The main function of management accounting is to provide data in the form of alternatives to the management. Okay. It is for management to make suitable choices among the alternatives or even discard all of them. So, management accounting can only inform, not prescribe. Management accounting provide only data. Then broad-based scope. The scope of management accounting is very wide and broad-based. It uses information from varied disciplines like financial accounting, economics, statistics, cost accounting, engineering, etc. It consider monetary and non-monetary transactions also. Okay, that's why limitations of the knowledge and experience of the management accountant in such a diverse field can make the data unreliable and undependable. Resistance to change. See, installation of management accounting involve basic changes in the organizational setup and traditional accounting practices. That's why personal concern make resist such changes unless they are taken into confidence and convinced of the need for such changes. That's why there may be resistance to change from the employee of the organization. Then cost to install. Okay, installation of management accounting involves huge expenditure because of elaborate organization needed and the large number of changes in procedures, forms, rules, methods. So, the small firm may not be able to afford the cost. Only the big organization can afford to maintain management accounting as a department or aid to management. And last and most important disadvantage is evolutionary stage. Management accounting is of recent origin as a discipline and it is still in development stage. So its concepts are fluid, techniques are still evolving and analytical tools imperfect. There are several experts who are skeptical of the utility of the management accounting because of such an important limitations. We are we are not able to implement fully management accounting in any organization. And most of the limitations can be overcome with the determined efforts on the part of the management and a skill management accountant. These are all about advantages and disadvantages of management accounting. In next video, we are going to see the difference between management accounting, cost accounting and financial accounting. Thank you.